Shares of Lennar are lower after reporting fourth quarter results that missed expectations. Joining us now is Ratner from Zelman Associates. Alan, it's great to have you on. Want to get your initial thoughts on this report that we just got at a time where we know there's been a lot of discounting. There was an expectation that we'd see margin pressure, but that housing is perhaps expected to start to turn the corner here any day, maybe.
Yeah. Hey, Morgan. Thanks for having me. Listen, it was a soft quarter. I think we knew coming into the print that there was going to be some choppiness, some noise. The company gave guidance back in mid-September when rates, were pretty much at their near-term low, close to 6%. They increased about 100 basis points through the quarter. We picked up a lot of, within our checks, a lot of examples of aggressive incentives throughout the industry, discounting, mortgage rate buydowns, which we expected to result in some margin pressure. We actually cut our numbers coming into the print, and I would say the results were even a bit below what we were looking for in terms of our reset expectations.
How meaningful is the news that the company is looking to spin out its land into a separate entity?
It's very meaningful. It's potentially transformative for the company. I think a lot of home builders in the last few years have shifted towards more of an asset-light land strategy, including Lennar. And this spin is really taking that strategy to the next level, pretty much going 100% off balance sheet land, which we think is going to really dramatically improve their returns, improve their cash flow, allow them to buy back a lot more stock. And I think just create a general more consistency within the business. That often is not the case when a company owns a lot of land and goes through a lot of kind of ups and downs in terms of land acquisition. So we think that longer term, this is going to be a really big positive for the company.
Alan, how much of the message of this report is if mortgage rates don't come to the rescue, and they haven't been responding really to Fed rate cuts anyway, this affordability issue for the prospective home buyer is really going to come to a head in 25?
Yeah, it's definitely a sign, but I would be a little bit reluctant to read too much into this quarter. There were a lot of kind of moving pieces within the quarter. First of all, this is a seasonally slower time of year for the housing market. It's a time where you typically do see more incentivizing, more discounts to begin with. You layer on top of that the fact that home builders entered this year with a lot of optimism. They thought rates would be a lot lower this time, than they are today. So they started a lot more homes earlier in the spring in anticipation of that. So we kind of had this perfect storm of building inventory during a seasonally slow time of year. And the builders had to respond to that by increasing incentives and discounting. The good news is I think that they're making progress and moving through some of that inventory. And as we get into a seasonally stronger time in the spring, we think the supply-demand picture could look more attractive than it does today. We just need to see a little bit of stabilization in the rate picture to result in that.
So I guess we need a continuing strong job market as well to fuel demand for those homes.
Absolutely. I mean, it's all contingent on the economy staying strong, the job market remaining strong. That's going to fuel any potential upside in housing for sure.